Today, we're discussing a topic that's got investors, entrepreneurs, and anyone thinking about their financial future asking some big questions. Capital gains tax. We're exploring 9 countries that don't tax capital gains, presenting some surprising options for those considering alternatives as many Western countries increase the tax burden. Now, capital gains tax is essentially a tax on profits from selling assets like stocks, property, or businesses. After risking capital on which you've already paid tax, the government comes in as an unwanted business partner and steals a large part of your gain without taking any risk. This, like all taxation, is unfair. After all, you're the one putting up the money, taking on the risk, and ultimately creating value. Let's take a look at 9 countries that take a different approach. One where they let you keep your capital gains. Welcome back to the Liberty Mundo channel, where we help high net worth individuals protect their assets, secure multiple citizenships, and legally minimize taxes. Visit libertymundo.com and get in touch for personalized strategies. Let's start with Luxembourg. Known as a low-tax country, Luxembourg exempts capital gains on assets held for more than 6 months. This makes it attractive for long-term investors who value financial stability without the fear of taxes eating into their gains. Next, we're going to look at Switzerland. Switzerland doesn't tax capital gains on assets for private individuals. If you're a regular investor, you get to keep all your gains. This country understands that encouraging investment is better for the economy than taxing success. On to Malta, a Mediterranean gem with favorable tax policies. Malta doesn't tax foreign-sourced capital gains for residents and provides some exemptions for local assets too. Malta's approach is about encouraging wealth without punishing success. Then we have the Czech Republic. Here, there's no capital gains tax on assets held for over 3 years. By rewarding long-term investments, the Czech Republic supports those with a forward-thinking approach, letting them keep what they earn after years of commitment. Estonia is next on our list. Estonia has made headlines as a tech hub, but it's also investor-friendly. There's no tax on reinvested profits or retained earnings until they're withdrawn, which incentivizes reinvesting in growth rather than facing immediate taxes. Now, let's look at Georgia. Georgia is becoming a favorite for financial freedom, especially for foreign residents who aren't taxed on overseas income. Georgia believes in letting investors decide what to do with their profits, fostering a hands-off approach that's rare today. Now to the other side of the world, we have New Zealand. New Zealand is another country that doesn't have a general capital gains tax. While certain property transactions are taxed, your investments are largely safe from capital gains tax. New Zealand champions the entrepreneurial spirit, showing that wealth creation shouldn't be met with high tax barriers. Now on to the city-state of Singapore. Singapore has no capital gains tax and is already known as a global economic powerhouse. Here, the philosophy is simple. By not taxing capital gains, the government encourages investment and wealth creation, trusting people to drive the economy forward. Finally, we have Hong Kong, a city that values financial liberty. There's no capital gains tax on profits, making Hong Kong one of the world's top investment destinations. Hong Kong shows that respecting financial independence can lead to rapid growth and prosperity. All right, that's our tour of 9 countries where you can keep your gains without government interference. It's a stark contrast to most Western countries, where higher taxes are putting more pressure on investors and entrepreneurs. Investing and creating wealth involves risk, and it's only fair that those who take the risks get to keep their rewards. If you're considering a move or looking to invest internationally, these countries offer alternatives that respect your financial freedom. It's never too early to start planning your asset protection structure. Not only does it ensure that your wealth is passed seamlessly to the next generation, but it also ensures that it remains immune to lawsuits, most taxes, divorce, and other attacks on your wealth. If you're ready to set up a trust or offshore company, go to taxfreecompanies.com and get started today. Thanks for tuning in, and if you found this useful, don't forget to like, subscribe, and share.